In our SBA Canada program, we used artificial intelligence to derive the accounting principles and assumptions used in practice as a starting point in defining GAAP or generally accepted accounting principles. These are remarkably similar to the principles and assumptions I was taught over 40 years ago. The proliferation of accounting standards, particularly in the 21st century, might be described by cynics as a tale told by idiots, full of sound and fury, signifying nothing.
Despite our centuries-long history using the venerable double-entry accounting system, different regulatory standards began to appear in the early 21st century. This process started after the stock market crash in 1929, began to evolve during the remainder of the 20th century, and then culminated with the introduction of IFRS in the 21st century. The Accounting Standards for Private Enterprises, ASPE, were introduced in Canada in December 2010. These standards were adapted from the International Financial Reporting Standards, IFRS, for small and medium enterprises published by the International Accounting Standards Board in July 2009. Canadian SMEs may now choose to use either of these two new standards. Note that US GAAP and the two newer standards were introduced due to audit scandals. The first was the stock market crash of 1929. The second involved WorldCom, Enron, and Arthur Andersen between 2001 and 2002.
10 years after the IFRS standard was launched, the new compilation standards for small private companies were introduced. This had the effect of increasing the cost and complexity of tax compliance services for tiny businesses. Effectively, they converted a non-assurance standard into a new and more highly regulated category of service.
Despite declining demand for audit services since about 2013, the cost and complexity of accounting standards have been increasing. Some might argue that the new compilation standard was a cynical response to the declining demand for audit and assurance work. In any event, small Canadian businesses must now prepare financial information that meets two different standards. The first is one of the four acceptable alternatives discussed earlier. The second is the tax basis reporting required for the tax authority.
The Supreme Court of Canada stated in Canderel versus the Queen that the determination of profit is a question of law. According to that decision, accounting standards are not law. In seeking to ascertain profit, the goal is to obtain an accurate picture of the taxpayer's profit, for purposes of Section 3 of the Income Tax Act. They went on to say a taxpayer is free to adopt any method which is not inconsistent with the provisions of the Act, established case law, and well-accepted business principles. We think it's clear that well-accepted business principles exist independently of the pronouncements of accounting regulators.
We should ask ourselves why the profession felt it was essential to develop standards the primary external users didn't feel was helpful, and that management mostly doesn't understand.